Hi there. My name is Nyashar, and welcome to another episode of Billy on Air. Today, I have a special guest. Her name is Sarah Shepard, and she is the real estate practice leader at Construction Risk Partners, a Baldwin risk company. Sarah, how are you?
Hey, how are you? I'm fine, thanks.
Good to finally get you onto the show, and people always like to know the folks that we're interviewing. So the first question I always have is, who is Sarah Shepard?
Well, thanks for having me. I'm Sarah Shepard. I'm actually newly a McGuinness, a new wife, a new mom. The folks in the insurance industry know me as Sarah Shepard, so I keep that professionally. Like you said, I'm the new real estate practice leader here at CRP. I come with a long consulting background. I'm new to the broker community. I historically have been an insurance consultant for owner, developers, lenders, and contractors nationwide.
That's great. So people have a different journey to get into insurance. We would like to know how Sarah got into insurance.
That's a great question. I would say, does anyone ever grow up and say, gosh, I want to get in insurance? I didn't. I didn't think I'd end up in insurance. Years ago, after I graduated from Boston College, I didn't love the job I had fresh out of school. And I had an opportunity at a risk management consulting shop here in Boston, a great firm. And I took the opportunity. It was a great salary for a young kid. I learned a lot. It was a great place to learn business of insurance and real estate. And it's provided a lot of opportunity moving forward.
You're absolutely right. Nobody really wakes up and chooses to say, I want to be an insurance broker.
Try to make it more glamorous.
Exactly. So for our audience, people always like to know what your company does. So what does Construction Risk Partners do for general contractors, owners, and developers?
Awesome question. So Construction Risk Partners, we call ourselves CRP. We're a brokerage shop. So in most simple terms, we sell insurance to owners, developers, contractors of all sizes nationwide. We have clients all over the U.S. for projects, portfolios all over the U.S. I was brought in as their real estate practice leader. So we are building out a platform, a group that specializes in operational real estate, not just construction projects. Our goal is to offer real estate insurance and consultancy work, no matter what your real estate exposure is, from land through construction of any type or size, all the way through operational insurances for the lifetime cycle of your ownership.
That's a great way to describe what Construction Risk Partners does. And a lot of our customers here at Billy essentially subcontract work. And the new buzzword that we're hearing is contract risk transfer. Can you explain to us what is contract risk transfer?
Yeah, absolutely. I would say the insurance and risk industry at large uses a lot of acronyms, a lot of buzzwords that makes the industry sort of notorious for being a black box that no one really understands. Most simply, I would say risk transfer is giving risk or insurance responsibility to another party. And so for your audience of owner developers and contractors, GCs probably in particular, that would be an agreement by and between two parties outlining work performed and who's going to insure that work. So a great example would be an owner developer on a construction project with a GC. The risk transfer would be in their contract outlining what work is going to be performed on what project, and most importantly, who is going to provide the insurance for the project. Does that make sense?
That makes absolute sense. I have another follow-up question there. So the contractors use systems like Procore or Autodesk, and Billy integrates with both. Why is it not enough to just collect a certificate of insurance when you've signed a contract in Procore and you get the certificate of insurance?
Awesome question. And frankly, while I've made a career out of this, I wish it was as simple as just collecting a cert. Bear with my sort of girly analogy for a moment, but I often say to folks, both owner and developers and contractors, that a certificate of insurance is sort of like when you're going shopping and you buy something, say a pair of shoes, and you get a receipt when you make that purchase. The receipt is completely different than the actual pair of shoes. The analogy here is the certificate of insurance, and the shoes are the insurance policy. You buy the insurance policy. That document could be 100 pages long, outlines the breadth, the depth of all the coverage that you purchased for an asset or a project or a portfolio, what's covered, but most importantly, what's not covered. Insurance policies are notorious for excluding a host of things. And so that perhaps 100-page document could outline all sorts of things that are covered and not. The certificate of insurance is probably only a page or two, and it's going to be a high-level summary like a receipt. It's going to say the name of who bought the policy, maybe the dates that the coverage is in place, some high-level summary like maybe the amount of millions of insurance that was purchased when it expires, but that's it. Does that make sense?
I love the analogy. Now, I can explain simply that getting a COI is getting a receipt, and you need the shoes that you're missing. But when we talk of these insurance documents and language, the shoes themselves, what should the general contractors be looking for when they're reviewing those?
When they're reviewing. So that sort of brings me to the third component of this process. There's the actual policy you buy, the certificate, which is that 1 or 2 page summary. That's important. I don't want to sort of undermine the importance of the certificate or the receipt, if you will. But the third component is the contract agreement between the two parties. So for example, if you're that owner developer building a building and you're contracting with a contractor, or if you're the GC on that same project, you might be contracting with 20, 30, 40 subcontractors. Each of those relationships should have a contract in place between the parties outlining the work that's going to be performed and, importantly, the insurance that's required on the job. And so those three things go together. There's policy, the certificate, and the contract outlining the roles and responsibilities. When it comes to reviewing the actual policies, I think the devil is in the detail. You need to look at, okay, what work is going to be performed? Let's quickly use a simple example of a painter in New York City. If you are hiring a painter to paint something on a New York City job and you collect their actual policy, you want to make sure that there are no coverage exclusions for New York City, that's where the work's taking place, and for painting, right? The actual work you're hiring the painter to perform. That's a really simple example, but your question about what should we be looking for, the answer is exclusions that pertain to the type of work that your party is going to perform, whether it's the state that the work takes place in, the type of work being performed. And the last thing I think that's commonly done incorrectly are entities, making sure that the exact company name that's performing the work is added to the policy correctly as an additional insured. That's sort of oversimplifying, but hopefully enough to gain some clarity for your audience.
Sarah, you're such a good teacher at teaching and simplifying very complex insurance terms that sometimes are a black box to many of our audiences as well.
Thanks.
A common question that we get is, So I sign contracts in Procore or Autodesk, and why am I getting an insurance audit? What is an insurance audit?
Gosh, the insurance audit, everyone hates those. I think a really simple way to, again, sort of oversimplify what an audit is, it's a way for the insurance company to review and potentially true up the insurance that they offered for the year previous. This is sort of a hypothetical example, but just follow me for example, or for a moment, excuse me. Say you bought auto insurance. Or no, let's just use workers' comp. That's probably a cleaner example. Say one of your contractors purchased workers' comp insurance for 5 employees doing office work. Fine. But over the course of the year, this company had all sorts of opportunity and went from 5 employees to 50 employees, not just doing office work, but work outside the office, maybe on the job. At the end of the year, the audit performed would take a look at the growth of the company, amount of employees, type of work those employees were doing, and true up the premium due. While no one wants to pay more money for insurance, you have to think of it from the insurance company perspective. Did you pay enough for the actual work performed by your company during the course of the year and the amount of people performing that work? Insurance audits apply to a lot of different types of coverage, but most simply, I would just summarize that it's a way for the insurance company to take a look and review to make sure the insurance they provided was properly underwritten and paid for.
That's a great explanation, and I can see why you're such a professional and a real estate practice leader. I like to close off because it's almost sunset here in New York. Why should general contractors consider working with construction risk partners?
Well, first, thanks. Insurance is a sort of tricky industry. I've found that it's an industry that a lot of folks sort of say not it. They don't, want insurance responsibility within their corporation, but it's a necessary part of any real estate or financial or construction endeavor, right? Insurance is required. And so our goal here at CRP, and my goal personally, even before I came here as the real estate practice leader, is to make insurance simpler for my clients and customers. Take that sort of dreaded responsibility of insurance off your desk, make it simpler for you, make it friendlier, help you understand it, give you the facts and figures you need to make an informed decision for your corporation, whether you are a owner developer, whether you're a contractor, whether you're a lender. And why should you partner with us? I think, construction is in our name. We focus on all things construction and now real estate. Partnership is also in our name. We prioritize partnering with our clients. I think a lot of brokers are known for just trying to sell you more insurance. I personally am not concerned with selling insurance. I think that will be a product of providing really, good advice, facts, and information to your clients to help them make the best business decisions they can for their construction projects and real estate portfolios.
We have learned so much from you on what contract risk transfer is, how you got into insurance, and what insurance audits are as well. Thank you so much, Sarah, for coming onto our show, and we look forward to having you back sometime.
Yeah, I hope so. Thanks so much for having me. And my email is available on LinkedIn. I welcome anyone to reach out with questions or comments or concerns on all things insurance. I'm here to help.
Thank you again. And for folks on Billy on Air, it's a wrap and a sunset for us. We'll see you on the next episode.